Hello friends, thank you for being here and welcome to my channel. This is Jakes. Now this is where we discuss all matters personal finance, investment and wealth creation and things that can move you ahead in life. Now today's discussion is focused on dead assets that you shouldn't put your money in. Dead assets that are making you poor instead of making you wealthy. So what are some of these dead assets? Now, we are talking about assets that are not liquid, assets that do not generate any return. These are called dead assets. That's what a dead asset is. I've bought an asset, but this asset is not generating any income, is not contributing towards my wealth. Now, in Kenya, majority of some of the assets that people buy, we are talking about agricultural land that is not used, unproductive agricultural land. We are talking about a mansionette that is built in shags that you never lived in or you will never probably live in. Or we are talking about money that is stored or kept in banks and fixed deposits that generate you returns that are below inflation rate. We are talking about assets, or we are talking about just personal items that you don't even use. 20 pairs of shoes, 20 pairs of coats and so forth. These are things that probably you will never really use and doesn't add value, as it were, to your life. Now, why should we not invest in these things? You know, in Kenya, there is an idea that if people see you have 3 or 4 or 5 or 10 acres of land, then you are considered wealthy. And to an extent, yes, you are, because that is money that is lying in there. And you're probably hoping that this land would appreciate in value. But again, you have to ask yourself, it is appreciating at what percentage? So if it is in remote places where it will be appreciating at 5% or 10% or 9% or maybe 6%, and there is a place where you could easily put this money and then earn even a higher return, then I think that is dead asset. Now, building a mansionette at home why do people build a mansionette at home? Some of these people that build mansionettes at home is they want glory, they want praise. So-and-so's son is as a bungalow here, and so people respect you that way. But really, can we put respect in a bank account? Is that an investment? Glory and praise, do they add to anything value-wise? Maybe, or maybe not at all. So we want to be careful on where we put our money. So rather than think, I need to buy a rental. Some people also say, I need to invest in real estate. And there's nothing wrong with investing in real estate. So I need to build a mansionette that people can rent and go in, and so people know that I own a plot of land. Well, it gives you return, yes, but what is the percentage of return for rental income? Now, number one, it gives you a return of between 7 to 8%. That is the return for rental. Now, counting the expenses that you need to maintain the house, we are talking about cleaning expenses, repairs, we are talking about caretaking, we are talking about tenants that don't pay their rent on time. Now, we are also talking about the taxation, the 10% tax on rental income. Now, if you combine these things together, then you minus that from the return that you're getting from your rental home. Probably now we are talking about 5% of worth of return. Is there another place that you could easily invest this 100 million you're putting in a rental income or into a rental investment? Absolutely. Well, there are several other liquid or less liquid but high return assets. Why not think about diversifying your portfolio if you are beginning? This is if you're beginning to build wealth. And think about putting your money in a government bond, for instance, that gives you between 16 to 18% of return. And some of these government bonds are tax-free. Why not think about diversifying your portfolio to a money market fund that gives you 15% worth of average return? Now, why not think about putting your money in stocks, for instance, and diversify your portfolio to growth stock or dividend stock that will easily give you a higher return as well. So really is a matter of thinking, is the asset I'm putting my money in generating me enough return worth to help me build a portfolio that can ensure that I am financially independent? I'm not chasing after some tenants who are not willing to pay their rent. I know a friend of mine who had a property that is sold to close to around $1 million, 100 million Kenya shillings. And if you invest that into money market fund, really, you know how much that is every month? If you had 100 million, I just want to do that in my calculation here to just tell you, to let you know what 100 million will mean. That means you are earning a monthly return on a money market fund. If you had 100 million, you will earn a monthly return of 1.06 million every month. Less likely that you will have such a return if your rental property is outside or outcast of Nairobi. So really, it's a matter of finding, yes, owning land, owning property might give me praise and glory in the village or in the community that I am a wealthy person. But probably another person who has the same amount of investment that you put into that property did another investment and probably will earn 2 or 3 times you in 10 years to come. So that's the point. We want to be really careful where we are putting our funds. If you're beginning to invest, please choose an asset that is liquid but also gives you higher return. Thank you very much. If you found this information insightful and helpful to you in making financial decisions that moves you ahead in life, please subscribe to our channel and please hit the notification bell. We will be uploading these videos every Monday. And we want you to move ahead in life and grow well financially. Thank you very much and see you in the next one.